Why do I believe that a massive fall is coming within the next couple of months? First, this is a bear market that has been coming for years now. I called it in September 2024, and by April, most good companies were trading at a 30 to 40% discount. However, that never really became a real bear market. We somehow survived. But now, with the bond yield spread finally rising above 60 basis points and gold showing extreme volatility, now it is time. About gold volatility, only in 1979 and 2008 has gold shown such outsized moves. It makes no sense for gold to sell off as fast as it did, except for the massive selling where funds and UHNIs needed to create liquidity for what is to come. See, when the markets see a turmoil coming, a few quarters away, they move out of equities into gold and other hard assets. This does not happen overnight because the corpus is huge. Now, by the time we get closer to a fall, which is where we are right now, most of the less experienced investors start moving into gold as gold rallies. At this time, the experienced investors sell gold because they need liquidity during the upcoming crash. For what, you ask? To buy into opportunities. I called this all the way back in September 2024, explicitly saying that the crash would truly come only when gold begins to sell off. Well, it's happening now. As the biggest proof of my call is the positioning of foreign portfolio investors. As of 1st February 2026, they held a net short position of 8,087,000 index futures and options contracts. This exposure is significantly higher than even the levels seen during the March 2020 pandemic. And that makes sense because COVID was only a small crash from a time perspective. This crash will be brutal, and for anyone following me, please understand what I'm putting on the line here when I come out and say this. All I have on this channel is my reputation, and I'm literally saying point blank that I'm massively short because it's time. This positioning is not just a hedge, but a high conviction bet that Indian valuations, which have been among the highest globally, are due for a sharp reset. The STT on futures was also raised from 0.02 to 0.05% as we know, and this just might be the final nail in our coffin. Our retail liquidity in options has been a primary floor in prices, helping stop downturns from converting into crashes. A reduction in volumes there could lead to higher impact costs and deeper drawdowns during sell-offs. The recession probability given by JP Morgan and other global research firms stands at 35% for a US recession in 2026. The new Fed chair, the US yield curve, and the unemployment chart are three reasons for a global crash to come. Join my live on this coming Sunday where I go in depth into each of these and answer all your relevant questions. Now, as to why now, I honestly cannot tell you that for sure, or I would be a billionaire. I could also be wrong, and that is why I'm hedged, but I know that it's time.